All eyes will be on the Reserve Bank later on today at around about 2:30 to be precise, with another cut to the official cash rate forecast. Joining me now, Joe Masters, the chief economist at Ernst & Young. Joe, good morning to you. So, is it a foregone conclusion that the rates will be cut?
It's not a foregone conclusion. We've got about 3 in 4 economists are expecting a rate cut. And if you look at futures markets, they're pricing in also about a 75% chance of a rate cut. So it seems highly likely, but it's not a done deal. And that reflects the fact that there's a lot of moving parts in the economy at the moment, and monetary policy always looks at a range of trade-offs.
I guess the next big question is, do the banks pass it on?
Yeah, look, absolutely, that's a big question. And as interest rates move towards zero, it actually becomes much harder for banks to pass on those rate cuts because they start to get a bit of pressure on their ability to attract deposits. So, there's some interesting views around that. The banks won't pass on the entire 25 basis point cut if that's what we get, but there'll be some variation between the banks.
Is this a fairly strong indication, Joe, that previous interest rate cuts just aren't working?
Look, I don't think about it that way. It really reflects the fact that as interest rates approach zero, not only do we cut interest rates on loans, but we also see lower interest rates on deposit accounts. And that makes it harder to attract deposits. And that impacts what we call the net interest margin for banks. So there is sort of some technical pieces behind it. Look, I think we do know, though, that as interest rates fall, you get less bang for your buck when you cut rates, which really reflects the fact that interest rates are already low, and actually mortgage serviceability is sitting around its long-run average. That's not the stress in the mortgage market.
So doesn't the fact remain that, people aren't spending, the tax cuts that were introduced earlier this year by the government? People are so heavily mortgaged that whatever extra money they're getting, they're just using that to pay off their mortgage, which they're perfectly entitled to do.
Look, absolutely. So we know about 1 in 3 Australians owns a home with a mortgage. And if you look over the rate cut cycle that we've had, what we typically see is that people that have a mortgage keep their mortgage repayments the same even as interest rates fall. And that's why we've seen this sort of prepayment. People are ahead in their mortgage payments by and large. So we do see that. But we do have 1/3 of Australians who rent and 1/3 of Australians who own a home without a mortgage. So there's also sort of an impact through that. And of course, when you cut interest rates, you do make mortgage serviceability a little bit easier for first home buyers in particular. There's also likely to be some Australians that have a mortgage that will spend it, who are sort of struggling to meet cost of living and don't really have the capacity to save.
There's an interesting piece, Joe, in the Australian today, and it refers to the fact that, more of these rate cuts can have a negative effect in terms of confidence, consumer confidence, which, as we know, is low at the moment. And all this talk about rate cuts and the economy not doing so well is causing this negative effect on consumer confidence, and that, it is worse than it actually is.
Look, we are seeing that. So we had the back-to-back rate cuts in June and July, and we saw consumer sentiment fall on the back of that. Now, it's also likely reflecting what we're seeing offshore, the trade dispute between the US and China, some of the political and geopolitical tensions that we're seeing globally, and also sort of ongoing news that the Australian economy is slowing and that job security is rising. But I think there is that balance between supporting the economy and making sure that sentiment is important. And I suspect that from the RBA today, we will continue to hear this term of sort of a gradual turning point. And of course, we're hearing from Governor Lowe tonight, and he's made the comment that he thinks the worst is behind us and we've got this gradual turning point, and some of that is to try and sort of instill that confidence.
But you've also got other factors, isn't it true, that, fuel is expensive at the moment too, and is probably going to get more and more expensive in the coming weeks?
Yeah, so fuel obviously is, for many people, it's an essential item. You can't change how much you spend on it, so that will be a headwind to the household. There's a variety of headwinds. We've got quite low week wages growth, very high debt, low savings rate. There are some offsets to that, though. The housing market has stabilised. In Sydney and Melbourne, house prices have risen in the last month or so. We've also got the low middle income tax offset. So that's money, that's that lump sum rebate that is hitting the bank accounts of Australians, right now. So there's a few things there that will support the household sector in the next couple of months.